It seems like everyone is wanting a piece of the crypto pie lately. Amazon is posting jobs looking for a digital currency and blockchain lead. George Soros' investment fund is investing in Bitcoin. And even the Rothschilds and Rockefellers are dabbling in cryptocurrencies and crypto-based assets. Well, we have more. Another major entity is looking to dabble in the crypto pie. So do you want a slice of our warm apple pie? Just don't jam it, please, because it's time for Chico Crypto. So who is this entity getting themselves their slice of warm apple pie? Well, it's not anybody new. This year has been filled with headlines about them getting involved with Bitcoin and crypto. So who is it? Well, it's the Sock Boys, Goldman Sachs. Okay, Goldman Sachs, I'll say it right just this one time, but for the rest of the episode, it's Goldman Sachs. So what have they done throughout this year? Well, actually a lot. They have been putting out research reports on crypto in May of this year. They were saying it's on the top of their minds and a new asset class. Then the next month in June, they started ramping up their Bitcoin trading, specifically with futures in partnership with Galaxy Digital and Mike Novogratz. But that isn't all. Goldman started getting wily this month in July. Last Friday, it was announced that Goldman was helping settle crypto ETPs in Europe. The CoinDesk article states, Goldman Sachs prime brokerage unit is clearing and settling cryptocurrency exchange-traded products, ETPs, for some hedge fund clients in Europe, according to two sources with knowledge of the matter. The services are currently being offered to a limited number of clients, and the bank has been reviewing the matter internally as it eyes rolling out these services to a wider number of customers. Well, those Sock Boys didn't stop with European ETPs this month. They are coming for America too. 3 days ago, it was announced they were filing with the SEC for a DeFi-based ETF here in the States. Although CoinDesk the very next day posted this article. Goldman's DeFi ETF is a nothing burger. With the subheading, Goldman Sachs filed for a DeFi ETF that would track stocks mostly associated with enterprise blockchain. So their ETF doesn't include any cryptocurrencies. It's for stocks involved with enterprise blockchain. What a bummer in the summer, right? Such a nothing burger. Well, not so fast, and this is why CoinDesk is always going to be a step behind Chico Crypto and my coming competition to them, my own media website, Blockchain Leaks. So yes, at first glance you would think, stonky stonks, this is a nothing burger. But if you dive down the rabbit hole and see what others don't, you realize that this might just tie back to actual cryptocurrencies. So the block also covered this ETF, and they said, per the filing, the fund seeks to provide investment results that closely correspond before fees and expenses to the performance of the Solactive Decentralized Finance and Blockchain Index. So from checking out this index, Solactive, we can see what stocks or companies are likely to be included in the Goldman DeFi ETF. Checking out the Solactive fact sheet from the 27th, we can see the companies that are included within it. A list of over 20 companies from all over the world who are somehow involved in blockchain and digital currency. But something really sticks out to me. Many of the companies listed are also a part of a consortium called the Confidential Computing Consortium. Listed on both are Google, Alphabet, Accenture, Cisco, Facebook, Microsoft, Intel, and Alibaba, aka Ant Group. So is this just a coinky dinky that 7 companies most likely going into the Goldman DeFi Index are also a part of this consortium? No, it's not. There's always more to coincidences than meets the eye. So the next question is, what crypto companies could be doing some serious things for these companies within the consortium? Well, scrolling down into the members, there is one that sticks out to us in the Chico Army, a project I have been a long supporter of. That is iExec RLC. So if you go to the projects of the Confidential Computing Consortium, 3 of the projects that have been built are all involved with TEE, Trusted Execution Environments. And if you didn't know, iExec, in collaboration with one of the members, Intel, wrote the EEA Trusted Compute Specification, which, as we can see, trusted execution environments are one of the trusted computes supported by this specification. And then, just last week, on the 20th, iExec released version 6 of their platform. And as we can see from the Medium post about the release, iExec says, "Public worker pools with TEE. iExec v6 makes this possible. Enclaves in production mode is a particularly exciting milestone as it allows for TEE public worker pools. iExec has always had the goal of rewarding individual workers for executing confidential computing tasks. This means that machines are enabled with trusted execution environments, TEE, specifically Intel SGX." Is all Chico has to say. But there may be a crypto project, a new one I haven't covered, who could have even bigger connections. But before we get into that, it's time for a sponsored segment of this video, supported by the team at Tencent. And like always, the full details of our agreement can be found below. So, to begin, who is Tencent? Well, the project was only launched back in April, and they already boast a top 300 market cap on CoinGecko, and as of yesterday was ranked actually number 240 with an over $146 million market cap. Now, switching to their website, we find out that they are building the bridge between cryptocurrencies and the world of traditional finance. How are they doing this? Well, by revolutionizing the past financial systems, which are siloed, and creating the new system, the Tencent ETF 2.0, which works in cooperation with each other to bring maximum DeFi incentives to the users. So now let's take a look at the key components of their platform, beginning with smart staking. This allows holders of Tencent to earn passive income by simply holding the token in their own wallet. There are no special lockups or special wallets you need to hold it in. You just hold it, say, in your ledger, and you are automatically staking. And then the token is highly deflationary. The protocol charges 2% on every Tencent transaction, burning half of the fees collected, then distributing the other half to all Tencent token holders. Now, the next two components are quite unique. Every Tencent token is infused with additional value through their smart backing program. Here, Tencent invests into other cryptocurrencies, yield farms, and staking opportunities, and eventually dividend shares. And currently, they have over 1 million in USDC locked on Aave, earning yield. And they also locked 320 ETH through 10 validator nodes staking on Binance. And 30% of the profits earned are put towards a Tencent token buyback from the exchanges, immediately burning those tokens, adding even more deflation and creating more value for users. The final component is the Tencent Gems launch platform. Here they provide tools and support for startup crypto projects, and it's a pretty good opportunity to assist projects looking to enter the blockchain space. But it also serves as a huge value add for Tencent token holders, because Tencent gets a little piece of every project that goes through the platform, and provides the Tencent token holders exclusive access to many of these projects before they launch. The first project to go through the Gems launch platform was MetaHero, and with the help of the Tencent team, they launched a Hero token which grew into a top 350 market cap project. And Tencent received 2% of the total Hero token supply, having all those gains infused directly into the Tencent token. And these types of token strategies have taken notice within many communities worldwide. In particular, their Korean token ambassador has just recently been hired by a Korean TV station, where he launched his own show called Coin Hunting. And congratulations to Tencent, as they will be featured on the show's premiere episode. So if you're thinking to yourself, where can I pick up this token, Tencent? Well, they are an ERC20 token currently trading on Uniswap and Gate.io, with many more chains planned for the future. And the first one goes live August 3rd, when the Tencent ecosystem will be fully integrated on the Binance Smart Chain, as much as I don't like that. They wanted me to mention it. And it launches its Tencent token on PancakeSwap. So, if any of this interests you, links for everything Tencent can be found below. So now back to the members of the Confidential Computing Consortium. And I gotta thank a CryptoSwim on Twitter for this research, as they were looking into Goldman's ETF too. And if you want to give Swim a follow, his profile is linked in the description. But Mr. Swim tweeted, "It might be a good idea to look into crypto projects connected to the consortium and to the companies within Goldman's new DeFi ETF. Oasis Protocol Rose is one of those projects. Check out this tweet for how Oasis Labs is connected to the consortium." Yeah, Oasis is actually one of the founding members of the consortium. Now, let's go dive into some more of CryptoSwim's research. Swim tweeted, "Also, we can see that TEEs are an important focus for the consortium, as well as a fundamental focus for Oasis. In fact, the CEO of Oasis, Don Song, is working to develop a new TEE called Keystone, which is one of the 4 projects the Confidential Computing Consortium is working on," which he posts a picture confirmation of. That is big, that is hot, but CryptoSwim doesn't stop there. With his recent tweet thread, he continued, "We can also see that connections are more than just superficial. In this presentation on privacy-preserving computation, Accenture specifically gives Oasis Labs a shout-out. They also discuss the importance of various technologies Oasis is integrating." Which, if we click into the Accenture document and search by Oasis, yeah, it is true. Accenture seems to be bullish on Oasis. That isn't all, folks. Swim tweeted just under this, "We can also see that Oasis Labs is listed under partners for Google's confidential VMs." He posts the picture proof, but we can confirm as well. Going to Google's confidential computing and clicking on partners, yes, there is Oasis Labs. Big connections for Oasis, and that makes me bullish. But we can't forget about iExec. These are both big players in the confidential computing space. Many of the Goldman ETF companies are a part of the Confidential Computing Consortium. If Goldman is ever going to list actual cryptocurrencies within an ETF, I would think these two would be high on their list. Cheers, I'll see you next time.